Alphabet, the parent company of Google, recently delivered a powerful message to the world. It announced financial results that were far stronger than anyone had anticipated. This news showed the incredible strength of its core business operations. For the final quarter of the year, the company's revenue surged by an impressive 18%, climbing to a remarkable $113.8 billion. This was not just a small beat, it was a clear signal that the digital advertising giant remains a dominant force in the global economy, capable of generating massive income even in a competitive market. The strong quarter capped off an extraordinary year for the tech behemoth. For the first time in its history, Alphabet's total annual revenue soared past the $400 billion mark. This is a monumental milestone. It underscores the immense scale and reach of the company's services, which touch the daily lives of billions of people. The company's profitability was equally impressive. The total profit for the quarter reached a staggering $34.5 billion, and the earnings per share, a crucial metric for investors, rose to $2.82. This figure comfortably exceeded Wall Street's expectations and proved the company's efficiency. This robust financial performance provides Alphabet with a tremendous advantage. The health of its primary businesses, particularly Google Search and YouTube advertising, continues to provide a deep well of cash. This financial stability is not just about posting big numbers. It is the fuel that powers the company's ambitious future plans. This solid foundation is absolutely critical as Alphabet prepares to embark on one of the most aggressive investment cycles in its history, a plan centered entirely on the transformative power of artificial intelligence. The message from these earnings is clear and direct. Alphabet is not just growing, it is thriving. The core components of its empire are firing on all cylinders, ensuring that the company has the resources and the confidence to make bold, long-term bets. This financial firepower gives Alphabet the freedom to pursue its strategic vision without being overly constrained by short-term market pressures. It sets the stage for the next chapter in the company's story, a chapter that will be defined by its pursuit of leadership in the age of AI. Following the announcement of its stellar earnings, Alphabet dropped another piece of news that sent ripples through the financial world. The company unveiled a massive spending plan for the year 2026. It intends to invest between $175 billion and $180 billion, with a significant portion dedicated to advancing its artificial intelligence capabilities. This figure was far larger than most analysts had predicted, and it represents a profound commitment to winning the AI race. The investment is aimed squarely at building the essential infrastructure needed for the next generation of technology. This huge capital expenditure will primarily fund the construction of new data centers and the acquisition of powerful specialized computer chips. These are the fundamental building blocks of modern AI. CEO Sundar Pichai was direct about the necessity of this spending. He explained that the demand for AI-powered services is growing at an explosive rate. To meet this demand and to continue innovating, the company must expand its physical infrastructure significantly. This spending is not a luxury, it is a requirement to stay at the cutting edge and support the company's future products. The strategic decision to pour such an immense sum into AI is a clear declaration of Alphabet's priorities. The company's leadership firmly believes that artificial intelligence is not just another product line, it is the core technology that will drive its growth for the next decade and beyond. By making this enormous investment now, Alphabet is trying to build a moat around its AI business. It aims to create a long-term sustainable advantage over its rivals. This is an aggressive, all-in strategy that signals the company's unwavering belief in an AI-first future. This level of investment is a bold gamble. It is a bet that the future returns from AI will justify the monumental upfront costs. The company is essentially building the factories of the 21st century. These factories will not produce cars or steel. They will produce intelligence. The scale of this spending shows that Alphabet is not just participating in the AI revolution. It is actively working to lead it, shaping the technology and the market for years to come. This move fundamentally redefines the financial landscape for the entire tech sector. The reaction on Wall Street to Alphabet's announcement was complex and divided. Despite the incredibly strong earnings report, the company's stock price experienced a notable drop, falling by as much as 5% in the hours after the news broke. This immediate market response revealed a deep-seated anxiety among investors. The primary source of this concern was the sheer size of the planned investment in AI. shareholders are questioning whether such a colossal expenditure can realistically generate a profitable return in a reasonable time frame, leading to a wave of caution. This nervousness is not limited to Alphabet alone. It reflects a broader unease about the escalating costs of the AI race across the entire big tech landscape. Competitors like Meta have also announced their own multi-billion-dollar spending increases on AI. This has created a perception of a tech arms race, where companies are forced to spend massive amounts of money simply to keep pace. Investors are worried that this intense competition could lead to unsustainable spending habits, eroding profits without a clear and guaranteed path to monetization. However, not everyone on Wall Street is sounding the alarm. Some analysts and industry experts argue that Alphabet's aggressive spending is a necessary and strategic move. They point to the remarkable growth in Google's cloud division as evidence that the demand for AI services is real and rapidly expanding. These supporters believe the investment is crucial for Alphabet to solidify its leadership position and capture what could be a multi-trillion-dollar market opportunity. For them, the spending is not a risk, but a calculated and essential step toward future dominance. Ultimately, the mood among investors remains one of watchful waiting. The strong earnings provide a cushion of confidence, but the unprecedented scale of the AI spending has introduced a new element of uncertainty. Shareholders are now closely observing the company's progress, looking for tangible signs that this massive bet will pay off. The market's initial hesitation highlights the central tension Alphabet now faces, balancing the immediate financial concerns of its investors with its ambitious, long-term vision for an AI-powered future. Buried within Alphabet's financial report was a particularly bright spot that helps explain its aggressive AI strategy. The company's cloud computing division, Google Cloud, delivered an outstanding performance. Its revenue grew by a staggering 48% compared to the same period last year. This rapid expansion demonstrates a significant increase in market share, showing that more and more businesses are turning to Google for their essential cloud infrastructure and services. This surge in growth is a powerful testament to the division's increasing competitiveness and success. A primary driver of this impressive growth is the soaring demand for AI products and services offered through the Google Cloud platform. Businesses across various industries are rushing to integrate artificial intelligence into their operations to improve efficiency, create new products, and gain a competitive edge. Google Cloud provides the powerful tools, sophisticated models, and robust infrastructure they need to do so. This powerful synergy between cloud computing and AI has created a virtuous cycle, attracting a wave of new customers eager to leverage Google's cutting-edge technology. The success of Google Cloud provides a strong justification for Alphabet's massive investment in AI. The division's high revenue growth is concrete proof that a large and profitable market for these advanced services already exists and is expanding quickly. This helps to build confidence among investors and analysts that the company's enormous capital expenditures are not just speculative, but are tied to real measurable demand. It shows that the strategy of deeply embedding AI into its cloud offerings is not just working, it is becoming a major engine of growth for the entire company. This performance positions Google Cloud as a formidable competitor in the fierce cloud market, which has long been dominated by Amazon Web Services and Microsoft Azure. The strong results signal that Google is not only catching up, but is also differentiating itself through its advanced AI capabilities. The success of the cloud division is therefore a crucial piece of the puzzle. It validates the company's broader strategy and provides a clear pathway for monetizing its deep investments in artificial intelligence, turning abstract technology into tangible revenue. At the heart of Alphabet's artificial intelligence ambitions is Gemini, its latest and most powerful AI model. The technology is quickly gaining significant traction and becoming a major force in the industry. During its recent announcement, the company revealed a stunning statistic. The Gemini application now boasts over 750 million monthly active users. This massive and rapidly growing user base demonstrates the model's immense popularity and widespread adoption. It provides Alphabet with an unparalleled platform for refining its AI capabilities on a global scale. The influence of Gemini is not confined to Google's own ecosystem. In a significant development, the technology is now being integrated to power some of the key features of Apple's iconic virtual assistant, Siri. This partnership with a direct and powerful competitor like Apple is a powerful endorsement of Gemini's superior capabilities. It signals that Google's AI technology is so advanced that even its biggest rivals are willing to rely on it to enhance their own flagship products. This collaboration highlights Gemini's status as a foundational technology for the entire tech industry. The incredible momentum behind Gemini serves as a core pillar of Alphabet's current and future growth strategy. The model's success solidifies the company's standing as a frontrunner in the highly competitive AI race. By developing and successfully deploying such a powerful and popular AI, Alphabet is proving its capacity to innovate and compete at the highest possible level. The widespread adoption of Gemini, both within and outside of Google's products, is one of the strongest indicators yet that the company's massive wager on AI is beginning to yield significant and promising results. This rapid ascent is crucial for Alphabet. It creates a positive feedback loop where more users lead to more data, which in turn helps to improve the AI model even further. This cycle accelerates innovation and helps Google maintain its technological edge. The rise of Gemini is not just a product success story, it is a strategic victory. It demonstrates that the company's decades of research in artificial intelligence are translating into real-world products that are shaping the future of how people interact with technology every day. Alphabet's leadership team has articulated a clear and unwavering vision for the company's path forward. This vision is centered on establishing and maintaining global leadership in the field of artificial intelligence. CEO Sundar Pichai has repeatedly emphasized that the company is currently riding a wave of strong momentum. He has framed the massive spending on AI not as a reckless expense, but as a deliberate and strategic maneuver designed to secure long-term sustainable growth. The objective is to construct a powerful and enduring foundation for the future. The company's overarching strategy involves a careful balancing act. It must pursue aggressive, forward-looking investments while simultaneously ensuring the financial discipline and health of its established businesses. While the spending figures on AI are astronomical, Alphabet remains intensely focused on optimizing the efficiency and profitability of its core operations like search and YouTube. This dual approach is designed to fuel the next wave of innovation without jeopardizing the stable financial base that has made the company so successful. The goal is to forge a sustainable path to growth. By placing such a large and decisive bet on AI, Alphabet is positioning itself to be at the very forefront of the next great technological shift. The company's leadership believes that AI will eventually permeate and transform every single industry, unlocking unprecedented opportunities for new products, services, and revenue streams. The current investments in data centers, research, and product development are all integral parts of a cohesive, long-term plan. The aim is to capture these future opportunities and solidify its competitive advantage in a rapidly evolving industry. This strategic vision is fundamentally optimistic. It is rooted in the belief that technological progress, driven by AI, will create immense value for both the company and society as a whole. Alphabet is not just reacting to the rise of AI, it is actively trying to shape its direction. This requires a willingness to think in terms of decades, not just quarters. The company is investing today to build the platforms and capabilities that it believes will define the technological landscape of tomorrow, ensuring its relevance and leadership for years to come. Alphabet is a leader in artificial intelligence, but it is certainly not alone in its ambitions. The AI sector has transformed into a fiercely competitive arena, with other technology titans making their own massive investments. Meta, the parent company of Facebook, has also announced its plans to dramatically increase spending on AI infrastructure. This dynamic has created a high-stakes environment where the world's largest and most powerful companies are all racing to develop the most advanced technology and recruit the industry's top talent. This intense competition is a major factor driving the caution seen among some investors. They perceive a technological arms race where companies feel compelled to pour billions of dollars into AI infrastructure just to stay in the game. The fear is that this could lead to a cycle of escalating costs across the industry, with no guarantee that the returns will justify the expense. The immense pressure to keep up with rivals means that companies like Alphabet must invest heavily simply to defend their current position, let alone to pull ahead of the pack. Despite this challenging competitive landscape, Alphabet's recent achievements demonstrate that it remains a powerful and formidable leader in the AI space. The strong growth of Google Cloud and the widespread adoption of the Gemini model are clear evidence of its strength. The company also benefits from a deep-rooted history of research and development in artificial intelligence, giving it a significant institutional advantage. This long-term focus on fundamental research has provided a deep well of expertise that is difficult for newer entrants to replicate. By continuing to innovate, ship popular products, and form strategic partnerships, Alphabet is proving its ability to thrive under pressure. The company is not just competing. In many areas, it is setting the standard that others are forced to follow. Its ability to successfully navigate this intense competitive environment is a testament to its technological prowess and strategic foresight. In the high-stakes AI arms race, Alphabet has shown that it has the resources, the talent, and the vision to remain a dominant force. As Alphabet celebrates its financial triumphs and forges ahead with its ambitious AI agenda, it continues to operate under a cloud of significant regulatory challenges. The company is currently engaged in major legal battles on multiple fronts, particularly concerning antitrust issues. Governments and regulatory bodies in both the United States and Europe are closely examining its dominant position in markets like digital advertising and mobile operating systems. This persistent regulatory pressure creates a tangible level of uncertainty for the company's future. During the recent earnings call, a forum where executives speak directly to investors and analysts, the company's leadership made a deliberate choice. They avoided any detailed discussion of these ongoing legal entanglements. Instead, their focus remained squarely on the positive financial results and the exciting technological future promised by their AI initiatives. This communication strategy suggests that while the company is undoubtedly aware of the regulatory risks it faces, its public narrative is centered on innovation, growth, and forward-looking opportunities rather than its legal battles. This creates a dual reality for Alphabet. On one hand, it is a celebrated leader in technological innovation, pushing the boundaries of what is possible with AI. On the other hand, it is a corporate giant that must constantly defend its existing business practices against accusations of anti-competitive behavior. The company must navigate this complex and often contradictory landscape. It needs to protect its current revenue streams from regulatory threats, while simultaneously investing billions to create the revenue streams of the future. The ability to successfully manage both of these immense challenges will be a defining factor in Alphabet's long-term success. The outcome of its legal battles could potentially reshape its business, while its success in the AI race will determine its relevance in the next era of technology. Balancing the need to defend its past and the ambition to build its future is the central task facing Alphabet's leadership today. Its performance in this delicate balancing act will be crucial for maintaining its leadership role in the global tech industry. The story of Alphabet today is one of bold ambition tempered by the complex realities of the market. The company is making an audacious, history-making bet on artificial intelligence backed by an investment plan of unprecedented scale. This move is driven by a powerful vision of a future where AI is integrated into every facet of life and business. Leadership is convinced that this is the path to continued growth and market leadership, and they are putting the full financial might of the company behind this conviction. This is the ambitious side of the story. However, this ambition is met with the hard reality of investor skepticism and intense market competition. The cautious reaction on Wall Street serves as a potent reminder that even for a company as successful as Alphabet, there are limits to what the market will immediately accept. Investors demand not just vision, but a clear and believable path to profitability. The escalating AI arms race with competitors like Meta and Microsoft further complicates the picture, raising the stakes and the costs for everyone involved. This is the dose of reality. The success of Google Cloud and the Gemini AI model provides the crucial bridge between Alphabet's ambition and the market's reality. These successes offer tangible proof that the company's AI strategy is not just a theoretical exercise. They are generating real revenue and attracting millions of users, demonstrating a viable business model. This progress helps to justify the massive spending and builds credibility for the long-term vision. It shows that the company can, in fact, turn its advanced research into popular and profitable products that people want to use. Ultimately, Alphabet's journey forward is about finding the right equilibrium. It must balance its aggressive pursuit of a long-term AI future with the need to deliver consistent, short-term results that keep investors confident. It must navigate fierce competition and a challenging regulatory environment while continuing to innovate at a rapid pace. The recent financial report shows that Alphabet has the resources and the technological prowess to tackle this challenge. The coming years will reveal how effectively it can execute this delicate and high-stakes balancing act.